Hey everyone, welcome back to Crypto Cash. Thank you so much again for joining me here. Hope you're having a great day. Let's take another look here at Solana, double check a few things here. A bit on the pullback side here. As expected, the price action after we retest that lower level here about 213 inevitably broke. And you got to keep in mind, folks, this is all based on Fed meeting yesterday, nice fundamental catalyst with Bitcoin pulling back pretty significant. Keep in mind, Bitcoin is in a descending type of trend. So we can presume that Solana is going to continue and follow suit. However, there's some important things you got to recognize too with support levels. So the main thing we're going to look at here today is how far back it could pull back. We'll draw out some new fib levels for the macro and just kind of help understand a good dollar cost average targets if we lose this $200 range, which seems almost inevitable at this point. But again, stranger things can happen, right? So let's go ahead and take a look at that here. We'll go ahead and jump into the backend data first. And as this is loading, I want to say thanks again for being an amazing part of my life. My Solana community has been a pretty consistent and amazing one. So thank you so much again for just being awesome parts of my life. And I want to say thank you too for always commenting and or hitting the like button. I probably get the most amount of views and or likes on my Solana videos, and it's really refreshing to get that kind of feedback. So thanks again, appreciate you. So let's take a look at liquidation first. 7-day forecast, or look back rather, doesn't really tell us too much. We got 200 to 202. If we look at the macro too, it doesn't really tell us much either on the 30-day. So what we want to look at, I would say, is the last 12 hours and just kind of get perspective on where people are hedged the most. So we can see, of course, that 202 level getting retested. There's a strong chance we'll see at least one more candle wick down to like the low 200 range to sweep those local longs and to essentially probably rip the price back up. So 212 to 215 is that area. We talked about that being previously a support range for us. Now it's a resistance, okay? So 212 to 213, kind of that previous potential area of support is now going to be treated as resistance. So that's this guy here, okay? So I'm going to draw that out. I'll update our playout chart and post a new chart here soon. Let me quickly touch on some of these red lines on the charts because I get the question, what are some key level supports and or resistances? And just note that this 200 is roughly 203, but you can round down and say 200. That was a previous resistance range for us. In other words, we couldn't pass that level back in March. We tried about 4 or 5 times, couldn't pass it. Same thing here as well. If you go back all the way to roughly just say July and even May, that's where this 185 comes into play. All right, so if you kind of zoom in, you can see here that there's a decent chunk of consistency where the price action couldn't cross that level and close above. Now that it has, we can presume that'll be the new support if it's retested. Having said that, 185 is a pretty simple way to simple and easy round number to understand that should be a new area of retracement. Okay, and as far as macro retracement, we can kind of pull up some pretty big fib levels now that we're on our way back down. We've crossed that 0 line. We can recognize here that these are some fib levels too. So I'm going to go ahead and post this on the playout chart. We'll talk about these in a moment here, but generally speaking, I trust previous resistances and supports more than I do fib levels. So if somebody is telling you that Elliott wave number 5 or some crap like that is going to be able to hit some random level, while I love and appreciate fib levels, they're very helpful. It's a good forecasting tool. It's not the only thing you use, right? Key level supports and resistances are important, and if they have confluence at those fib levels, then it's even better. Okay. Anyways, just some food for thought there. No discredit to anybody who solely uses Elliott wave. It's just that it's very limiting and blindsiding. It's basically like how horses, they run on the tracks with those blinders on. It's cool to be able to see what's going on in front of you. You're driven, right? But if you forget everything in the peripheral, you're limiting yourself significantly. Anyways, another terrible example. Hopefully, maybe that one stuck for somebody, but you'll know if you watch, as you continue to watch my videos, I have a tendency of giving very terrible analogies. Either way, good little humor there for you, perhaps. Okay, so let's take a look at the daily and recognize that we are below the 20-day SMA. I drew out this trend line here. Or updated it rather based on more of a macro perspective. Because again, when we have these bigger plays, bigger movements, we need to recognize larger time frame scenarios. So instead of just focusing on the 1 hour, the 4 hour, the daily I think is going to be a little bit more pivotal or important for us because we can see here that this descending trend, the 20-day SMA, is kind of running concurrent with all of these little peaks here. So until we break above the 20 and or this descending trend line, we have no reason to take along with confidence. Granted, you could buy the dip at 200. That's all well and good. Feel free to do that, but that should be a spot play, not a leverage play. All right. You should never take a leverage trades in a descending trend to the upside just because it's a support level. That's proven to be a very fallible strategy. Hindsight's 2020, of course. I'm sure you'll probably have great luck doing that, and you have in the past. But if you do it over and over and over again, you'll recognize your layer of success is super low. It's going to be under 50%, and that's not what a good trader does. We're under 50 on the RSI, reinforcing that descending trend. Stochastic swinging down, money flow index pulling back with it. These are generally unfavorable signs. Okay. Now, while the MFI is above the RSI, that's slightly positive. It's really not that big of a deal on the macro here, based on the overall situation that we're dealing with. So I don't put a ton of weight on that, and since everything else is mostly bearish, we want to make sure that that's kind of the emphasis here, instead of kind of, because again, some folks when they trade, they're sitting there looking at like 50 different time frames, trying to convince themselves that this is a good trade to take. You don't do that, folks. You limit the amount of time frames that you use. I would say 3 or 4 tops. You extract a small amount of information from each of them, and if most of them are pointing in one direction, that's the direction you trade. That's generally the concept here. So everything so far on the daily is proving to be bearish, right? Same thing here in the 4-hour. We look at this, we're below all moving averages. That's generally a bearish sign. We can see RSI is getting closer to its bottom point. I don't generally like to trade, take a short into a key level support. Again, $200 is that round number for that support. We're close to 30 in the RSI. Usually you'll see a pivot point here initially. It's generally construed as a dead cat bounce, but I'm thinking we might see that, but we are stochastically swinging down. And of course, we look at the MACD still diverging. So there's no reason to take a long here whatsoever. If you do, make it a quick scalp in and out. I don't recommend it whatsoever. But everything here is bearish, right? So if we take a look at that and then we go to the hourly, we can recognize that Ichimoku cloud is also confirming that there is no reason to take a long position and that everything's likely to continue lower. There's no reason to take a trade right now to the upside. Now, the question here is, do you take a trade to the downside? That's the funny thing. That's like the flip side here. And the easy way to say it is no. Taking a short into a support range isn't appropriate. Even though everything's bearish on the time frames, it's still like it's mostly getting maxed out here to the downside. So unless Bitcoin makes a significant run to like 97, 96K, which it kind of looks like it's planning to do, it's kind of pulling back here right now, losing its tentative support at 99.7. I think that we're probably going to see further downside. But if you look at this, you compare the charts, they're pretty much identical. So, you know, Solana is going to be basically hand-holding with Bitcoin right now. The only thing I forgot to look at here, of course, and this is important too, is just liquidation delta. Let's go ahead and refresh this guy. And let's just double check here. We can see that there's a pretty significant amount of bearish divergence here too. In other words, we have more people taking shorts than longs. So it's important to go with the grain and to not try to take a long into that, right? Because again, your odds of success taking a long right now is pretty low. But again, it doesn't necessarily mean you just take a short at the bottom either, right? It's like trying to long the top, so to speak. While we don't know where the bottom is, there's a good chance it could continue to run. There's probably not like a ton of meat left on the bone here for Solana. It's just my personal opinion. And I would say 185 is a best case scenario. So again, if you're going to decide to short, you know, that little 6-7% run, there's a possibility you'll find some success there. But if Bitcoin can kind of just chill and relax, I think Solana might recover too. But there's no doubt that the Solana is extremely bearish. Most of the market is. So you're going to have a tremendously larger amount of success going down than you will going up, right? So again, it's really just a flip of a coin in a lot of ways. But for the most part, things are pointing down. So don't bother taking a long right now. That's a simple way to understand it. Okay, cool. Hopefully I reinforced that or reiterated that multiple times. I'm sorry if I sound like a broken record, but I've got a lot of novice traders watching my channel, and I like to make sure that we always talk about best practice. You know, if you're like a 50x leverage nut job that likes to you know, take high risk plays and brag about how great you are on social media, you're probably in the wrong place. No offense, that's just not what I do. And it's okay that that's your thing if it is, but the problem with the market is that people think that's what trading is all about. And it's just very unfortunate. So hopefully I can continue to change that and maybe adjust the mindset of, you know, treating trading like a responsible thing instead of just a, you know, get rich quick thing that rarely happens to most people. Anyways, thanks again so much for watching. Feel free to comment below. Love to hear your thoughts. And if you're a troll, welcome aboard too. Appreciate you too. You know, with whatever you got to say. Love to hear it. But don't forget to like, subscribe, and follow if you haven't yet already. Join us on Twitter, Telegram, and Discord too. I'm going to go ahead and post a playout chart here as per usual. Every time I analyze the charts, I pretty much tell you what I think is going to happen next. It's all available for you there. And join us over at Bitunix too, folks. Link down below. No KYC or VPN required exchange. These guys are phenomenal. They've been great to us, and they offer a deposit and or reward bonus monthly. All you have to do is use my link. You'll automatically be eligible for those things. So check them out. I think you're going to love them. Have a good rest of your day, folks. We'll look forward to seeing the next one. Take care.